Good morning to all my friends and viewers. Welcome to my channel. Uh, 2 days ago, I ended salesmanship, and now let's talk about money, credit, and banking. And this time, my topic is about money. Part one: money. Inside the money, money and the economy. Number two, the Philippine financial system. Three, money, function, and kinds. The rationale of the saving decision, the payment system, and financial intermediation. And annex. Now, let's go to money and economy. Money has many uses. It's a medium of exchange and standard of value. Such uses can be a good or can be bad. Some say the money is the root of all evil. On the other hand, others claim the money is the source of happiness. Actually, there is nothing wrong with money itself. What is wrong is the way money is being used. So the blame is on the user who become the slave of the money. There are many good things that money can do for individuals and country. We need money to satisfy our basic needs like food, clothing, shelter, health, and education. The government uses money to implement its numerous socio-economic programs. The businessmen need money to build their enterprises. Money is the needed in both domestic and international trade. Without money, significant economic growth is not possible. Our economy remains in its primitive stage. However, it is unfortunate that the wonders of money have not improved the lives of millions and millions of poor peoples of the world. Only few became rich and powerful. These are the ones who control the economies and government of their country. There is therefore a great need to redistribute the fruits of development in the name of social justice. Money, credit, and banking. This chapter presents the history of money, the supply of money, and the importance of money. Excuse me. In addition, the goal of the economy such as full employment, economic growth, and others are explained. History of money, the Phoenicians, the peddlers of the sea during the ancient times conducted their trade by means of barter. Slave girls were exchanged with cattle, iron, or bronze. Early society used grain, cattle, salt, tobacco, shells, and various metals as monies. Although primitive forms of money were used by ancient tribes and that civilized people of the Euphrates and Tigris were acquainted with debt and financial instrument, it was Greeks who invented the coin, stimulated trade. People were all attracted to the acquisition of money. They were no longer satisfied with the function of goods for their family consumption only. They went to the markets to sell their fruits, vegetables, handicrafts, and other products. In later years, the glory of Greece was surpassed by the vast and powerful Roman Empire. However, at the height of their imperial power, the rulers became corrupt and immoral. The government could no longer support the huge expenses of the large Roman armies. Eventually, trade became stagnant and agriculture was neglected. The barbarians, under the leadership of Attila the Hun, took advantage of the decaying economy and planned the Roman Empire. Antonius Augustus said money had more to do with the distemper of the Roman Empire than the Huns and Vandals. The supply of money. According to George Bernard Shaw, the lack of money is the root of all evil. In many cases, there is truth to this. Very for individuals who have no money for food are likely to commit social crimes. Survival is more important than law. Countries which cannot deliver basic social services to the masses due to lack of funds create social discontent or seven disorder. In view of the depressive economic condition in many countries in Latin America and Africa, there have been frequent changes in their government through violent means. And this is no good for the economy. On the other hand, too much money is not also good. If there is a plenty of money or money and goods are scarce, price go up. People with money buy goods and services. Since they are scarce, the prices rise due to the natural operation of the law of supply and demand. Whenever demand for goods is greater than supply of goods, prices increase. Such situation reduces the value of purchasing power of our money. Thus, even we have plenty of money, we are still poor. Our money can only purchase few goods and services. Precisely, this is the reason why the central bank does not print money if is if it is prints trillions of pesos and distribute them the poor, then everybody has plenty of money but prices increase in billion or trillion times. So our money has practically eliminated this value. It is the central bank that regulates money supply through its various monetary tools. These are explained in chapter 15. However, it is not easy to control money supply. It requires competence, integrity, political will, and support from both the government and business sector. We are really need good government, financial, economic administrator in a excuse me in a resolution adopted by the Institute for Monetary Research Inc. State. The essence of money problem is more moral more than technical. Money is being the standard of economic value and measure of commerce. The manipulation of money is evil, whether in the interests of creditors or debtors, industry or labor, producers or consumer, government or taxpayer. Thus, the integrity of money should be maintained by clearly defined content and composition and by the adherence to the definition. The importance of money. Money has created not few varied impressions. On the positive side, it has been said the money gives power, prestige, and privilege. Money can make us rich and famous. It is also a source of happiness. On the other side, money is the source of corruption and sorrow. It is an evident that money is not all blessing. People cannot live by bread alone, as they say. Some claims that money cannot buy happiness, it can only buy pleasure. Money cannot buy friends, it can only buy companions. Money can buy love, it can only buy sex. And many other things that money cannot buy. Denmark is prosperous nation. Its people enjoy one of the highest standards of living in the world. Yet Denmark is number one in the rate of suicides. Number two is the United States. Another rich country. This is clearly points out the money is not everything. It is the shortcomings. However, the bottom line is not money itself. It is the user of money. If man has a strong social and moral values, then he is the master and not the slave of money. Money facilitates trade. Prior to the use of money, barter was practiced. This means goods were exchanged with other goods and services, or services with other services. Such transactions are obviously inefficient, cumbersome, and time-consuming. These are not favorable to economic development. With the introduction of money, the shortcomings of the better system were eliminated. Money has become the medium of exchange and standard of value. The product and merchant sells their good in exchange with their money of the buyers. For instance, you pay your tuition fees with money. It's a very simple transaction. Without money, how could you pay your tuition fee? Hmm? If you are the son of farmer, you pay with sacks of rice. But suppose since the university likes sugar instead of rice, you have to exchange first your rice with sugar. With the presence of money, the value of goods and services can be determined accurately. We know that the value of our book or ballpen by its price. Without money, it is hard to determine the exact of the product or service. In the case of your tuition fees, how many sacks of sugar are you going to exchange with the services of the university? Under the barter system, valuation was just matter of mutual agreement, or perhaps the values were established by tribal or community practices. Money stimulates production. During the barter era, people were self-supporting or self-sufficient. That is, they only produced what they needed. They traded their products with other goods which they did not have, like fish in exchange with rice or corn. Such economy was primitive in the sense of there were no fundamental changes in their method of production and allocation of goods and services. Likewise, there were no significant improvement in the standards of living of the people. However, with the introduction of money, commerce has been accelerated. It has been easy for people to sell their goods and services. Their profits have further encouraged them to sell more, and this has stimulated the production of more goods and services. This paves the way for the coming of modern economy and modern civilization. The frontiers of commerce and industry have expanded, more markets have been developed, and better methods of production and marketing have been introduced. Unfortunately, only very few nations become the biggest beneficiary of economic progress created by money. Many countries are still poor and underdeveloped. Their peoples are the workers or servants of the rich country. This is not the fault of money. This is the evil created by rich and powerful individuals who cause the unjust distribution of wealth and the height of power of British Empire. All the best and beautiful lands of Africa were granted to the Queen of England. Former colonial masters are now the rich countries. Money accelerate economic growth. Individuals who have surplus money are the bank servers or depositor. The borrowers use the money or the server to put up their business enterprises like factory, uh, agribusiness department, store, school, hospital, and others. In short, the savings of the same some people are the investment funds of other people. It is seldom that the savers are entrepreneur. The financial institution mobilize the savings of individual for investment. The latter is the key to the economic growth. Investment as supermarket and factory create thousands of jobs. They are also produce goods and services. Ultimately, investor get their profit, employees receive their salaries, and the consumer acquire goods and services. These are not only the economic benefits of investments, it means more incomes to the government in the form of taxes payment, the supply of raw materials to factories, and products to supermarket are likewise benefited. A good example is the SM Giant store in Metro Manila. When more people have incomes in result to more expenditure, such expenditure further encourage more investment. Businessmen are pushed to put up more enterprises whenever there is an increasing demand for goods and services. This simply means there are more buyers. Eventually, such accelerated economic activities lead to economic growth. Without money, this is not possible at all. The goals of the economy. Economics is defined as a social science which is concerned with the proper allocation and efficient use as scarce resources to satisfy human wants. Since resources are limited while human wants are unlimited, basic economic problems have been created. These are what goods and services are to be produced, how these are to be produced, and for whom these goods and services are to be produced. Such economics problem requires efficient solution. Cost and benefits have to be evaluated. Thank you, Lord. But efficiency is not only the goal of society and the economy. In the economy, economic freedom and social justice are more important to the individuals, particularly the poor. And both the business sector and the government have social responsibilities towards the attainment of equal economic opportunities and equitable distribution of wealth and income. In poor countries, social justice is more relevant than economic efficiency. The goals of the economy are: number one, full employment; two, economic growth; three, price stability; four, balance of payment and exchange rate stability; five, efficiency; and lastly, six, equitable distribution of wealth and income. Full employment. It is a situation in which those who are able and willing to work can get job. Those who do not like to work are not considered jobless. Under full employment, all the available productive resources are fully utilized. When more people are employed, more goods and services are produced. Therefore, there is also an increase in the GNP, gross national product. This is the total market value of the final goods and services produced by native citizen in 1 year. The GNP is the barometer of our economic growth from year to year. As stated earlier in this chapter, it is investments that creates employment, and money is the source of investment. Aside from bank deposit, which finance investment, corporation also offer their security stock and bonds to the public. In such securities are worth, let us say, 10 billion, then these funds are used for business expansion or for new enterprises. Such huge amount of money generates thousands and thousands of jobs. In addition to the domestic investment, foreign investments also greatly contribute to the creation of jobs in underdeveloped countries. Foreign investment are much needed. Economic growth is the product of economic development. The latter is a progressive process of improving human condition. For example, economic growth for 1994 represents the goods and services produced in the said year, such as car, house, roads, school, buildings, college, graduates, and other. In other words, economic developments refer to the inputs, while economic growth represents the output. To produce more outputs, it is necessary to increase and improve the input. The IMF always prescribed currency devaluation to remedy deficit balance of payments of less developed countries. It claims that devaluation encourages export and discourages import. But IMF seems not to understand the less developed countries are importance of industrial raw materials for their factories and machine and heavy equipment for their economic development. Even the export of the poor countries can hardly penetrate the world markets, which are monopolized by the rich countries. Obviously, devaluation is not good policy for the poor nation. Economic efficiency. Efficiency is productivity. A farmer who have harvest 300 kabans of palay per hectare is more efficient than one who will get only 50 kabans from his land at the same area. Producers in rich countries are more productive than those in poor countries. The application of modern machine, modern technology, and good management has given the rich country the advantage in securing efficiency. The Japanese are the most efficient farmers. They have highest output in rice production. Even American farmers are very efficient. They constitute only 4% of the US population, but they supply not only the needs of the American consumer, but also the food requirements of other countries. In our case, we have an agricultural economy, but we are importing some basic farm product. This is the situation of all agricultural countries. However, in poor countries, social equity is more relevant than economic efficiency. Their most pressing problem is the creation of millions of jobs to save their people from starvation and disease. So the most appropriate technology for them is labor-intensive technology. This is the technique of production which requires the use of more workers than machine. Such technology generates more jobs for the employee. Due to labor shortage, the rich countries depend more on machine or capital intensive technology for their production of goods and services. In Japan, there are robots in factory and hospital. It is cheaper to use machine than manpower in poor countries. It's not the question of economy or efficiency. It is a matter of social equity or justice. The million of jobless urgently needed help in order to live. Equitable distribution of wealth and income. The word equitable means fair or just. The concept of equitable distribution is a matter of value judgment and therefore has various meanings to different social groups. Some claim that equitable meanings to different social groups. Some claim that equitable distribution of wealth or income is in accordance with contribution to production. Other believe it should be based on the on equality. What then is the real meaning of equitable distribution? They are social equalizer which any government can use as land reform, cooperative, progressive succession, and social security program. In some society, the poor are not really poor. Their governments provide them free housing, education, hospitalization, recreation, and adequate allowance for the aged and the jobless. In the US, clerks and workers own cars, the poor can buy the food of rich. There is equitable distribution of wealth and income if the gap between the rich and the poor is narrow, when the very members of society experience a decent standard of living and dignified existence. But when the poor and the servants of the rich and the builders of mansions live in barong-barongs, there is no fair distribution of wealth and income. Now let's go to the question for review and discussion. Question number one, what are the uses of money? Which are good and which are bad? Number two, question, briefly state the history of money. How did the money contribute to fall of the Roman Empire? Three, question, oversupply of money is not good. Why? Sorry again for the interruption. Sorry again for the interruption. I will repeat the question. Why is social equity more than relevant to economic efficiency in poor countries? Number 8, give your personal opinions about the distribution of wealth and income in the Philippines. Again, sorry for the interruption. Now, this is the end of my topic about the money and economy. Now, let's go to my second topic, Chapter 2, the Philippine Financial System. The financial system is widespread. Its various institutions touch the lives of people all over the world and individuals and organizations in a civilized society and market economic had been directly involved in the operation of the financial system. For example, we use money in buying goods and services. We borrow money and from banks, pawn shop, credits union, or even from unlicensed money leaders who are often called users. Such common activities within the financial system appear simple and familiar. However, the financial system as a whole is a lot more complex in structure and operation. More often than not, we lack of good framework for viewing the financial system as the whole is a lot more complex in structure and operation. More often than not, we lack of good framework for viewing the financial system as a whole. It does not only include banks, credit unions, pawn shop, or users, but also other financial institution such as insurance company, investments company, lending investor, etc. Moreover, international financial institutions like the World Bank, International Monetary Funds, and the Asian Development Bank are also part of our financial system because they have a great influence in the formulation and implementation of our banking, law, and monetary policy. Shout out to Filipinos TV. Shout out. Good evening. They finance of our biggest project, Likewise, the central banks of the Philippines and the other government agency, together with the policy affecting money, credit, and banking are part of our financial system. In modern economy, the financial system is more sophisticated. It has a vast network of various institutions with modern facilities. Its operation cover all commercial and industrial centers of the world. Its policy and programs play a major role in the social and economic development of the region. Concern. In fact, the financial centers of the world like New York, London, Singapore, and Hong Kong are all prosperous places. This chapter explains the nature and function of the financial system, in addition to the influence of the World Bank, International Monetary Fund, Asian Development Bank, as well as the global banks or multinational banks on our financial system is briefly discussed. The details are, however, presented in chapter 16 of this book. Nature and necessity of finance. The financial system is a network of various institutions which generate, circulate, and control money and credit. It is provide intermediation between the supplies and user of the credit. The financial system is a very important part of the economic system. The former does not only extend loans to individual families, small producers, big businessmen, and industrialists, but also finances the social and economic development of the country. It has been noticed that financial institutions of the highly developed countries like the United States and Japan funded their programs for development towards industrialization and modernization. Some people have excess money, while many others need funds for consumption or production. There's a circumstance the service of the financial institution, like a bank, should be made available to both parties. Those who have surplus money are inclined to look for profitable investment or to lend their money in order to earn interest. In a primitive society, money lenders can directly deal with the borrowers. However, is the large market, middlemen are needed to facilitate the meeting of lenders and borrowers. But in a highly developed economy, specialists are needed to satisfy the business interests of both suppliers and users of funds. And precisely this is the primary job of a bank and other financial institution. There is no need for the lenders to meet and deal personally with the borrowers. Both parties transact their business through the financial institutions. This is more convenient, economical, and safer for the lenders. The financial system acting as an intermediary between the lenders and borrowers of funds creates several positive implications on the national economy. For instance, the idle funds of some people who have access money are made available for profitable projects or production. This means more employment and income. When people have no more comes, they buy more goods and services. And this is good for the economy. Similarly, more production means more goods. This is a very good way of fighting inflation or high prices. Elements of the financial system. Financial claims, these are the money and the rights to receive money under the specific circumstances. Usually these are evidenced by financial instruments which specify the terms of the claim. There are two basic categories of claims, debt and equities. Debts are financial obligations which are to be paid, while equities are claims of ownership like shares of stock. Financial institutions, these are private or government organizations who assess consists of primarily of claims or incomes primarily derived from dealing in and or performing services in connection with claims. Institutions which deal with the creation and issuance of claims against themselves and use the proceeds to acquire and hold claims against others are commonly referred to as financial intermediary. In simpler language, such as institution, act of middleman between the supplier and user of credit. Some of these are quite familiar to many people, like commercial banks, savings loan, uh, association, and finance companies. The other financial institutions are primarily engaged in services related to claim, such as giving financial information or advice. Financial markets. These are institutions which expedite transactions in financial claim. Example are the Manila Stock Exchange and the other organization dealing with money market operation. A financial market serves as a means of bringing the forces of demand and supply of financial claims. Government agency. Monetary policy are formulated by the Monetary Board of the Central Bank. The central and other financial institution being the premier and financial institution, it controls money, credit, and banking operation in the country. Law and policy. The national government regulates and supervises the law, whole economic in order to attain its development objectives. Since the financial system is an integral part of the whole economy, laws and policy on money, credit, and banking have been made to ensure monetary stability and economic growth. Such laws are legislated by Congress. The main jobs of implementing said law fall on the Central Bank of the Philippines. Function of financial institution. The general function of financial institution is to facilitate the transfer of funds from the saver to the user. Such transfer of money requires assistance from financial institution because the volume of saving is large. In addition, certain barriers are created in the process of transferring funds, such as risks, inconvenience, and cost of transfer and liquidity problems. Financial institutions perform specific functions such as investigation and credit analysis. Loan applications are properly evaluated to ensure the efficient use of credit and to protect the savings of individuals as well as to minimize the risk of non-payments of loan. Matching the supply and demand for funds, financial institutions are money brokers. They are bring the lenders and the borrowers together to make things convenient and economical for both parties. Financial institutions provide conveniently located offices. They specialize in matching the supplies of saving with the demand for funds. Provision for liquidity. Many savers are reluctant to transfer their money to borrowers. They need cash before their debtors could pay them. In the case of buying bonds, they may not be able to find buyer when they decide to liquidate their bond holding. However, with the presence of the financial institution, the liquidity of financial assets can be increased through their brokerage function, which provides an organized market. The investor can find a buyer for his debt or ownership claim. Moreover, some financial institutions accept saving for individuals who in return acquire claims against the asset of the financial institution. In case savers decided to liquidate his claim, the financial institution can pay him with in current funds it has received from other savers. Provides payment system. The transfer of goods or services from one person to another should be efficient. Such efficiency, which is measured in time and labor, facilitates trade and commerce. And this is good for the economy with money which is used as a medium of exchange and standard of value. The transfer of goods and services has become convenient, faster, and economical. Whenever we like a certain good, we just exchange our money for it. In short, we pay goods and services in order to acquire the rights to use them. Such payment system has gradually evolved to suit the needs of the expanding market economy. In a modern economy, checks and credit cards are being used for convenience and safety. Some monetary specialists have envisioned a cashless society to improve to exchange system. It's the central bank which is responsible for the operations of the payment. Structure of the Philippines financial system. The Philippines financial system is not only made of the bank institution but also non-bank financial institution. The following is a classification of the various financial institution which constitutes the structure of the Philippines financial system. Central Bank of the Philippines banking institution. Number one, private banking institution. A commercial banking institution, expanded commercial banking, universal banking, ordinary commercial banks. B, thrift bank, savings and mortgage bank, private development bank, a stock saving and loan association. Letter C, rural banks. 2, government and banking institution. A, Philippine National Bank. B, Development Bank of the Philippines. C, Land Bank of the Philippines. D, Philippine Amana Bank. Non-bank financial institution. Number one, private non-bank financial institution. A, investments house. B, investments company. C, financing companies. D, security dealers broker. E, non-stock saving and loan association. F, building and loan association. G, pawn shop. H, lending investor. I, retirement provident pension fund managers. J, trust company departments. K, insurance companies. L, credit cooperatives. 2, government non-bank financial institution. A, government services insurance system. B, social security system. Financial reform. In 1980, a series of laws were introduced amending the General Banking Act, Savings and Loan Associations Act, Private Development Bank Act, Charter of the Development Bank of the Philippines, Investment House Act, and the Central Bank Act. These reforms were part of the recommendation made in 1972 by an IMF-CB group and by the IMF-WB mission in 1979. Likewise, the offshore banking system was established in 1977 as proposed by the SES group. This is allowed the multinational banks to operate in our financial system. One of the financial reform was to increase financial system. One of the financial reform was the increase of the capital base of commercial banks from $20 million pesos to 100 million pesos. Such as capital requirement has reinforced as for several commercial banks to merge their resources with foreign banks. The WBIMFCB group's proposal were made to patch up the shortcomings of our financial system. Among other things, the banking industry could not support the economic program of the country because of its inadequate long-term loans, and the financial system is made up of so many small institutions which made it inefficient. With their less competitiveness, they do not enjoy the economies of scale which the big banks have. The objectives of the 1980 financial reforms are: one, to attain greater efficiency through increased competition and scale of economics, and two, to obtain greater availability and use of long-term funds to attain sales objectives. The following reforms became necessary for implementation. Uh, Ibon Zeta or Ibon Zeta, I don't know how to pronounce it, but I think that is a Ibon Zeta or Ibon Zeta. So, one, introduction of universal banking. Two, removal of most ceiling of interest on interest rates of deposit and loans. In three, increase of the powers and function of quasi-banks. Four, elimination of all functional distinction between private development banks and savings banks. Five, minimizations of the difference between banks and quasi-banks. Multinational banks in the Philippines. Global, global banking has been dominant among the third world countries like the Philippines. Multinational banks, also known as transnational banks, operate in our country through their branches, offshore banking units, representative office, and or equity investment in both financial and non-financial institutions. Multinational banks are international financial institutions which operate in many countries throughout the world. They specialize in international finance, and their clients are primarily the multinational corporations, governments, big companies, and wealthy individuals in the developing countries. Multinational banks are owned by the highly industrialized countries like the United States, Japan, France, Great Britain, and Canada. Such banks have the huge resources which are several times bigger than the international reserves of the central banks of the industrialized country. They have no, they have so much resources they can decide which country can be saved from serious economic crisis. Almost 70% of the 300 biggest banks in the world are owned by only six rich countries. The transnational banks of the United States alone, together with Japan, has 42.3% of the total assets of the whole global banking system. In the Philippines, top American, Japanese, and European banks have business affiliation in both financial and non-financial companies. For example, the top 10 U.S. banks operate in our country. The first three top U.S. banks are Citibank, Bank of America, and Chase Manhattan. The role of WB, IMF, and IDB in the Philippines financial system. The World Bank, International Monetary Fund, and the Asian Development Bank are owned most by the government of the industrial countries. The United States is the biggest stockholder of all the three international financial institutions. As a matter of tradition, the president of the World Bank is always a American, the managing director of the International Monetary Fund is always as a European who is acceptable to Americans, and the president of the Asian Development Bank is always in a Japanese. Nevertheless, the United States has a strong influence in all three institutions because of its large voting power. The WB and IMF were created in 1945 by the same monetary authorities that occupy the same headquarters at Washington, D.C., and they hold their annual meetings together. The initial objectives of the WB was to assist in the reconstruction of Western Europe, which has been devastated by the World War II. Some years later, the WB shifted its goal to financing its development program projects of the developing countries. In the case of IMF, its principal objective has been to ensure an international monetary system that will promote their international free trade dominated by the US and the industrial nation. Regarding the ADB, which is based in Manila, in main function is to help promote the economic and social development of its member countries, especially the less developed of one. The bank has 15 non-regional members countries which are highly developed countries like the United States, France, Canada, West Germany, among others. The Philippines is a member of WB, IMF, and ADB. It is also one of the biggest borrowers from each said institution. Very rigid requirements have been being imposed on borrowing member countries with a very low credit ratings like the Philippines. For example, one particular condition for the approval of the WIBF WBIMF loan is to implement political, fiscal, and monetary reform. They are also decided the specific type of project they want to finance. Here and some on the unusual conditionalities. Whenever a member countries apply from loan from WBIMF, number one, adoption of floating rate system; two, devaluation of the peso; three, import liberalization; four, export promotion; five, encouragement of foreign investment; six, erasing of specific tax on oil products; seven, removal of price control over essential goods for domestic use; next, limiting of growth of money supply and domestic credit; next, reduction or elimination of consumption subsidies like rice subsidy. And lastly, limiting of budget deficit of the national government. What is good financial system? The financial system plays a very vital role in the economy and society. It holds the funds for investments, business, and development. To the poor countries, money is the lifeblood of the economy, and yet is a very scarce and very precious. Most of incomes from foreign investment and the loan and foreign loans. The central bank, which is the leader of the financial system, has been entrusted with a very great responsibility of promoting monetary stability and economic growth for the whole country. However, this do not only refers to big building in the cities, elegant mansion in the suburbs, and impressive super highways and bridges. If the rules and resources of the financial systems belong mostly to the WB, IMF, and the multinational banks, then we cannot call it our own Philippines financial system. If only the rich and the powerful have access to our financial institution, then our financial system is devolved of social responsibility. And if it has not touched the lives of the poorest of the poor, then it has done nothing except for privileged few. The financial system, through the leadership of the central bank, should be use its financial and technical support, technical resources to correct the maldistribution of wealth and income. This is the root cause of poverty and therefore must be uprooted. The financial system should be channel its resources into the development of the fresh religion of the country and into the project for the poor who constitute the majority in our society. The central bank should really strive to promote the social justice of development Unfortunately, it has been alleged the central bank has become a tool of foreign interest. UP professor Edberto Villegas stated that ever since the central bank was established, one of its main functions has been to serve as the conduit for facilitating American economic activities in the country. In the same manner, Dr. Augusto Cesar Spirit to observe our past national and social development has the Marcos government has built monuments to vanity, extravagance, and conspicuous consumption, but has failed miserably to provide for the basic need. Should we not work for a development strategy which foster justice, participation, and sustainability? Ultimately, our development policy will be relevant only insofar as they touch the lives of those whom Rabindranath Tagore has identified in moving poetry as the poorest, the lowest, the exploited, and the lost. Now, let's go to the question and answer. Question for review and discussion. Question for review and discussion. Number one, define financial institution. Two, why is a financial system important? Three, what are the elements of financial system? Explain one. Four, what is the general function of financial institution? What are the specific function? Explain one. Five, give specific examples of banking institution and non-bank financial institution. Six, what are some of financial reforms of 1980? Give your own comments below. Comment box. Seven, what is transnational bank? How does it operate in our country? Eight, what are the general objectives, function of WB or World Bank, International yan, IMF and ADB? Number nine, state some of the conditions imposed by WB, IMF on member countries' borrower. 10. What is good financial system? Give your own comments on the observation of Dr. Espiritu. All right. Now, this is the end of question for review and discussion. Now, let's go to my third topic, money, function, and kinds. By the way, for those latecomer, my topics is about money, credit banking, part one, money and in the economy, the Philippine financial system, money function and kinds, the rationale of the saving decision, the payment system and financial intermediation. So now, uh, my topic number is about my third topic. My third topic is about money function and kind. In the entire history of mankind, there have been several, excuse me, most outstanding invention. Money is one of them. Without money, production, distribution, and consumption of goods and services would very slow. This means that economic activities would take as much longer process. Money has been considered the most popular economic good. Nobody hates money. Our most important, the basics need, can only be acquired through the use of money for as long as we live in a modern economy. On the other hand, money is not everything. There are precious things which money cannot buy. For example, money cannot buy a home. It can only buy a house. There, the house who claim that money is the root of all evil. It can destroy the social equilibrium and create economics complete conflicts and exploitation. However, despite of the weakness of money, its vital role in the socio-economic development of any country cannot be denied. The only circumstance in which money has become bad is when some people misuse it. But if money is used to benefit to the poor and for productive investment, then its invention has not been in vain. In our country, the central banks of the Philippines control the use of money in order to achieve monetary stability and economic growth. What's then in money? Many of us are always thinking of the money, but we do not know its precise definition. Terms like currency notes, cash and credit add to confusion about the meaning of money. This chapter helps you to understand the meaning of the money and its function. Money defined. The following are some definition on money according to authorities in this field. Money is what the law say it is. Chandler, 1978. Anything that is normal accepted when its transfer of purchasing power takes place. O. Bannon, 1972. O'Bannon et al. 1972. It is a claim for payment in that it is universally acceptable in exchange for goods, services, or financial instruments of a given value, with the value measured in terms of the units of account. O'Bannon, 1972. The sum total of currency and demands deposit. Singer, 1958. It is that which debtor may compel a creditor to accept in payment of the debt, whether public or private. Paras, 1976. Money is anything that is generally acceptable in exchange for goods and services. Castillo, 1969. Anything that is generally accepted as a medium of exchange. Hutchinson, 1967. For the aforementioned definition of money are certainly suggestive of what money does. Stating it differently, the term money has been defined not in accordance with material it is made of, nor the identity of the issuer and such other criteria as the case may be, but in accordance with the various capacity or function or uses it performed, as the aptly described by Adam Muller. Money is a money only insofar as it is not private property but is the common property of as many persons as possible and indeed of all. Sol, 1963. Muller asserted further that the only at the moment of exchange or of the circulation of the substances of money are this latter really money. This is a last statement coincide with the section 51 of the Central Bank Act, which provides the word currency be interpreted to mean as all Philippines note and coins issue or circulating in accordance with the provisions of this act In addition, the second paragraph of Section 53 of the said law provides that the central bank's holding of its own notes and coins shall not be considered as part of this currency issue and accordingly shall not form part of the assets or liabilities of the bank. Shout out to Main Coracha. Sige, tambay ka lang po. Function of money. Practically almost all books of money are in total unison in identifying the function of money, although varying number, this function of money may be referred to as the moneyness of money. They are as follow. Number one, it is a medium of exchange or means of payment. Two, it serves as a unit account, common denominator of value or standard of value. Three, it's act of store of value. This function of money as enumerated above are by no means inclusive. However, the listing are to be considered adequate for they represent the fundamental uses of money as the great wheel of circulation. The great instrument of the Commerce Chandler 1978. Likewise, it may be rationalized that the first two in the above listing are the primary function of money as expounded by Paul A. Samuel's son, a noted economist. Hence, the remaining function is merely an adjunct, accessory, or subsidiary to the first two provincial functions of money. This is so because of the natural course of event through the passage of time. Not unless it is doubtly interesting to point out of a contradictory view. Yeah. Shout out to pretty ma'am. Shout out. Good evening. The function of money are hereby explained. Medium of exchange. When one states that money serves as a minimum exchange, it simply means the money is used as a tool to facilitate exchange transaction or the transfer of goods and services. Units of account, when money is said to be acting as a unit of account, it simply means the money is being used as a yardstick in measuring the value of goods and services in the exchange process. In this connection, it is appropriate to take note of the meaning of the term unit account as the abstract unit by which we measure, record, and compare market values, the unit is which we keep our personal and business account. O. Bannon et al. 1972. Here in the Philippines, the unit of monetary value is the peso, which is represented by the sign P with the line and P and divided into 100 equal parts called centavo, which are represented by the sign C, Central Bank Act. Now, with respect to contractual obligation payable in terms of money, Article 1259 of the Civil Code of the Philippines is the rule to observe on the matter to wit. In case of extraordinary inflation or deflation of the currency stipulated should supervene, the value of the currency at the time of the establishment of the obligation shall be the basis of payment unless there is an agreement to the contrary. A store of value. Finally, money as a store of value simply means the money may be accumulated in the same manner of wealth. Stating is another way, money is another form of wealth, the value of which is stable, so to speak. Such a statement account for the contradictory view earlier enunciated. To elucidate on this point, scrutinize the following. Singer 1958. Economical, this is the most important function of the money. Money is considered the most liquid assets, that is money is a form of wealth which can be immediately converted into physical goods and services or into financial assets such as stock and bonds. We may either, among other relatives, hold on to money that is hoard money keeping in a strong box or under pillow on maintained account savings bank according to supply. Indeed, money is treated as a special or extraordinary or peculiar type of financial instrument. It is regarded as a claim against society as a whole rather than against any single debtor or Bannon et al. 1972. Features of a good money. The underlying consideration for both the issuer and user money, either paper notes or coins, is convenience. As such, the following are the characteristics of good money. General acceptable. This is because of a law which mandates or particular things to be the only means of payment in a given political area. In this connection, Section 52 and 54 of the Central Bank Act will be more than adequate to emphasize this aspect, acceptability, the former provision, and authorize the central banks and gives to its sole right and authority to issue currency within the territory of the Philippines. No other person or entity of public or private may be put into circulation, notes, coin, or another or any other object or documents which is the opinion of the monetary board might circulate as currency nor reproduce or imitates the facsimiles of central bank notes without prior authority from the bank. It goes without the authority to investigate, make arrests, conduct searches, and seizure in accordance with the law for the purpose of maintaining the integrity of the currency. For instance, Presidential Decree number 247 prohibited and penalized the defacement, mutilation, tearing, burning, or destruction of central bank notes and coins. The violator is punished by a fine that's not more than 20,000 pesos and or by imprisonment or not more than 5 years. The latter provision speak of full guarantee by government of the Republic of the Philippines over all notes and coin issued by the central bank at the same being declared legal tender in the Philippines for all debts, both public and private. However, coins are legal tender in amounts not exceeding 50 pesos for denomination from 10 centavos to 1 peso and in amounts not exceeding 20 pesos for denominations of 5 centavos or less. Divisible. This refers to the interconvertibility of currency. Thus, the central bank is required to exchange on demand and without charge Philippine currency of any denomination for Philippines note and coins of any other denomination requested. If any for any reason the central bank should be temporarily be unable to provide notes or coins or denomination requested, the same will have to be met by delivering notes and coins and the denomination which most nearly approximate those requested. Another interpretation of this quality of money is that a given denomination is being divided into several denominations without losing the value worth. For example, one of pesos coin may be exchanged with 100 pieces of 1 centavo coin, just the same, it is still 1 peso. Uniform. This connotes similarity of homogeneity for the purpose of avoiding confusion in the use of money. For example, uh, 10 2 pesos bills are just like another 2 pesos bill denomination taking or select from 10 hundreds or even 1,000 pieces and set denomination. This apply also to coins. Malleable. This apply only to coins since coins is made of metal. It may be liquidated through intense heat and therefore capable of being reshaped or recoined into other denomination. On the contrary, paper is complained. Cognizable. The term is taken from recognizable as such the thing or an object being used or designed designated as money must be easily recognized by the populace even by the unschooled. Portable. The term is taken from transportable as such the object or thing being used or designated as money must be handled or easily to carry by individual person from one place to another. Durable, this refers to the staying power or a given object or thing designated as money to remain as such in circulation. In the Philippines jurisdiction, Section 58 and 59 of the Central Bank Act will be governing rules. The former provision authorized the Central Bank of the Philippines to withdraw from circulation and demonetize all notes and coins which for any reason whatsoever are unfit for circulation and replace them by adequate notes and coin. In general, the central bank is not duty bound to replace notes and coins, the identification of which is impossible. Coins which show signs of filing, clipping, or perforation, and notes which have lost more than two-fifths of their surface or all of the signature inscribed thereon. However, there must be withdrawn from circulation without compensation to the bearer unless it is proved to the satisfaction of the central bank that the currency became unfit for circulation as a result of accidental causes or forces beyond control, in which case replacement is made. The latter provisions gives to the central bank a discretionary power to call in for replacement notes of any series or denomination which are more than 5 years old, and coins which are more than 10 years old. Notes and coins called in for replacement will still be legal tender for a period of 1 year from the date of call, after the lapse of one or during the following 3 years, or for such longer period as the monetary board may determine. They may be exchanged as par and without charge in the central bank and by the agent duly authorized by the central bank for this purpose. Thereafter, notes and coins which have not been exchanged cease to be liability of the central bank and demonetized accordingly. Kinds of money. Kinds of money, looking at things as they are, the economic, political, and social facet of today of modern world, and cannot help but express the view that that there exists in reality at most two kinds of money. They are first one, commodity money; two, fiat money. Commodity money, inevitably when one speaks of commodity money, the reference is always the so-called precious metals, gold and silver. Gold, however, occupies the dominant and enviable position. Indeed, many people regard gold as money par excellence. For instance, in international finance and commerce among nations of the world, gold is generally accepted as international medium of exchange, irrespectively of the ideologies of the countries involved. So much so that the literature of the on monetary system bounds with reference to types of gold: standard silver, standard, and um, bimetallic bimetallic standard, with both metals as standard money. Fiat money is money times in modern times is unthinkable to refer to particular money being used in a given country as having no mandated by means of law, order to decree, sanction, or command. For after all, fiat means order or sanction. In the Philippines, as mentioned earlier, the means of payment currency is the peso. This is mandated by the central bank account. Managed currency. Present fiat money has gained different uh, nomenclature such as credit money, uh, fiduciary money, inconvertible paper money, and non-commodity money. Nonetheless, as type of monetary system, fiat money may be referred to as managed paper currency, managed paper standard, or inconvertible paper standard. It is obvious that this is susceptible to discretionary control. By and large, the increase of decrease in money supply is the responsible of the central bank, but its basing is the decision of several factors like the needs of business, uh, responsible of the central bank, basing its decision on several factors like the needs of business and industry level of economic development, business cycle, and such other criteria as may be deemed necessary and advisable by the monetary authority as warranted by the prevailing circumstances. Uterio et al. 1972. Monetary standard. The monetary standard of a country is synonymous with its standard money. The latter plus all the paper, credit, substitute type, and convertible into standard money constitute the monetary system. This is also includes the government mechanism involved, especially the central bank, which regulates the creation of money, and the banking system, which issue banknotes and creates checking account money. The monetary system of a country is usually described in terms of its standard money. When the standard of monetary unit is gold, the country is said to have a gold standard. If the standard money is silver, it is silver standard. When both gold and silver are used as a standard money, it is referred to as biometrically standard. Gresham law. Under the bimetallic standard, gold and silver have the same nominal value or face value. That is, their value are indicated like 20, 50, or 100 peso. However, the real value of gold or silver as a metal are commodity changes depending on their supply. For instance, the discovery of more silver reduces the real value or price of silver as a metal, supposing the nominal value of silver of money is 50 pesos, but its real value is a metal is only 20 pesos. Then silver is overvalued as money. In this particular case, both gold and silver have the same nominal value of 50 pesos since the real value of silver only 20 pesos. People will not use gold as money but sell it as a commodity, especially if its real value is even higher than its nominal value. Such monetary principle is known as the Gresham law. It is stated the overvalue money tends to drives out circulation under value money. Gold and silver standard. Gold or silver standard money has been acceptable anywhere, especially gold. This means that there is domestic and international confidence in the monetary standard. Thus, there are no problem in international trade. However, gold and silver have their own shortcomings. These are bulky and heavy. In other words, they lack portability. Moreover, it is risky to be carrying gold or silver from one place to another place. There is also a high cost of producing gold or silver as money. Likewise, there are difficulties in sustaining an appropriate supply of gold to feed the requirements of the economy. For instance, poor gold production affects adversely gold supply. Because of such limitation, among other things, the gold or silver standard was changed. Gold silver exchange standard. Gold or silver exchange standard replaced the gold or silver standard. A representative money was used, such as paper or coin money. The money supply was equivalent to the amount of gold, silver reserve held by the government. People could exchange their representative money with gold, silver if they wish to. Under this monetary standard, there was 100% support of the money in circulation with gold or silver. Such monetary arrangement has also several limitations. Clearly, it was difficult for most countries to maintain a 100% gold silver reserve to back up the monies in circulation. Such reserves are also productive since only very few actually exchange their paper money with gold or silver, and so gold silver exchange standard was abandoned in favor of the inconvertible paper standard. Inconvertible paper standard, the inconvertible paper standard or money's currency standard has been required by the government as the standard money for all normal transactions. This makes illegal tender. There are no gold reserves to ensure in general acceptability. The government orders such monetary standard as medium of exchange as a mean that payments in the Philippines as standard monetary units is the peso. Its supply is crucial for the operation of the economy. It can either approve its ruin the economy, hence the proper management of the money supply has been vital to the economic growth of the country. One good features of the convertible paper standard is the money supply can be contracted or expanded through the various monetary tools to suit the exchange's economic condition. Such monetary control cannot be easily applied to gold or silver. Another advantage is that the production of paper money is cheaper than commodity money. Also, paper money is more portable. Nevertheless, the aforementioned monetary standard has not been free of defect. For instance, an oversupply of money creates inflation. The incompetence and corruption of the monetary authorities certainly lead to financial crisis. Eventually, this could be destroy the whole economy. Different types of money used in the Philippines. It suggests to anyone who is really interested to know more about money, their shape, size, design, or whatever they may be, to visit the Money Museum of the Central Bank of the Philippines. It is expected as such that visit will be produce enlightening experience, a learning process, thereby forming the right perspective of what money is. Such perspective is such the following manner: Guide to the Money Museum. To the more discerning, money is much more than a medium of exchange. Money is a historical document which is often provides clue to the culture, religion, and tradition of society, primitive or civilized. Money can be and often is work of art itself, reflecting the artistic heritage of a people. Money is also a record of a people achievement and aspiration and a monument to a country heroes. Viewed in the light of history, Manis reveals a panorama of artistic achievements, tradition, beliefs, notable events of social and political changes of people. At the museum, one will be able to view in person the earlier coins used in the Philippines, such as the gold uh, piloncito of pre-Spanish time and famous Spanish pieces of 8 ounce of pirate lore used in the historic galleon trade. With respect to the Philippines paper money, there is an on exhibit a rare treasury note of 1877 and the hand signs note of 1896 of the Banco Español Filipino. The other paper money on exhibit as follow. Number one, paper money of the first Philippine Republic Revolutionary paper money designed by Pedro Paterno. Two, insular government silver certificates and treasury certificate. Three, Philippine National Banks of Emergency Circulating Note. Four, the Bank of the Philippines Islands 100 peso note. Five, the Japanese military notes during the occupation together with the money of the resistance. Six, the central bank notes by virtue of the establishment of the central banks of the Philippines in 1941. Central Bank Security Printing Plant Mine and Gold Refinery Complex. If one is inclined to know almost everything about the central bank security printing plant, mine and gold refinery complex, as to take hold of the inaugural issue of the same dated September 7, 1978. As a matter of fact, the issue is the main source of what is lies below. One of the easily noticeable superimposed structure in the East Avenue de Liman, Quezon City, Metro Manila is a five-building complex which houses the Central Bank Security Printing Plant, Mine and Gold Refinery. The huge structure are occupying total land area of 5.7 hectares with a total floor of area 61,303 square meter. Although it is considered first of its kind in Southeast Asia, it is like to that of the United States renowned gold depository in front know-how. Fort Knox, however, the necessary precautionary measure against unauthorized outside intruders are well taken care of. One may just go there to see it for himself. From the standpoint of organizational framework, the complex is being managed as two separate departments, namely one, the security printing plant, two, the mine and gold refinery. The setup is mainly for functional and administrative purposes. It must be noted that prior to the establishment of the complex, the Central Bank of the Philippines depended on foreign construction for its note and coins. Special mention may be addressed to Thomas de la Rue and Company, TD, well known as a highly respected security printer in England, where Philippines bank notes had been printed since 1949. Coins, however, were minted in the United States, Germany, and other foreign countries. Rationale of establishing the central box complex. The reason for the installation of the complex, among others, is not limited for avoiding the dilemma of recurring currency shortage accordingly. In his pragmatic and innovative way, Ligaroso, the project in relations to economic stability, has benefits to the country if it had its own main and security printer, besides saving on foreign exchange, which would be otherwise go to foreign contractors. The local removes the risk of a coin or banknote shortage that disrupt the economy and its demand in the streets. The hardest political disorder abroad and international hijacker and terrorist pose no threat to the security of a currency that is made at home. Moreover, full government control over the security and quality of the national currency is assured. It's printing the banknote requirements alone until 1980, the central bank will save an estimated $5.5 million. This includes savings from freight insurance, labor, and related expenses, which are calculated to reach $26 million for the same period. Then President Ferdinand A. Marcos commented that it is an auspicious occasion for our economy because it is one of the most visible and concrete symbols of the economic aspiration of the Filipino people and the feasibility of their attainment. It's also a milestone in the progress made by this country along the road to national dignity and self-reliance. Since the advent of the new society, the government has adopted many policies designed to ensure that the country economic progress will continue in the face of uncertainties of the international scenes. The effectiveness of this policy is attested to by the very favorable credit rating enjoyed by our country in international finance and the evaluation of experts from international finance organizations, not the least among the items which have merited commendation in the management of the domestic economy. The facilities we are inaugurating today epitomize as no other structure can the self-reliance nature of the administration of our domestic economics affair. Honorable Gregorio S. Licaros, in his capacity as Governor of the Central Bank of the Philippines, said that we are doing so in the context of a policy framework which seeks to create an environment in which we can pursue our national development with its minimum of external constraint. In this sense, this is a new facilities possess not only practical but also symbolic value, for it can be truly said that we are now master of our own destiny when it's come to domestic monetary matters. This new facility also fills a long-standing void our economic infrastructure, which has been growing more noticeable down through the years. Heteroid has been economic anomaly that one of the largest gold producer in the world did not have its own refinery. The output of this refinery, together with the printing and the minting of our own currency, will not only enable to save foreign exchange but will also afford us an opportunity to earn foreign exchange from the service performed from other countries. Prime Minister Cesar E.A. Birayta Birata made the following observation in his capacity as Minister of Finance. The increasing need for currency circulation to support the increasing monetization and economic growth of the country led to the consideration of security printing plant in the Philippines. Aside from currency, there are no, of course, other needs for security. Printing such as stamps, bonds, and stock, checks, and the like is also possible for the Philippines to serve other countries in the region for their currency printing requirement. The reestablishment of the mint for our circulating coin requirements is also another phase of operation which has been encouraged. We used to mint our silver coins before World War II. Now most of the coins are made of the nickel and copper raw materials which abound in the Philippines. Additionally, this gives us the opportunity to develop metal engraver and their possibility of minting for others. While gold has been phased out as a reserve asset in the second amendment to the Articles of Agreement of the IMF, it remains an important monetary asset. As a gold producer, the Philippines should process more its gold production and should be able to market it directly in refined form. The security printing plant. In a span of 200 working days, the plant has the capability of producing 384 million banknotes. In addition to this, the plant can likewise accept printing other related security instruments such as MICR encoded checks of the banking and financial system, deposit passbook, torrents, titles, and internal interview stamp, postage stamp, and others. The Mint. Annually, the Mint has the capability of producing 120 million coins of different denomination. It has the equivalent to produce the working dies used for stamping the coins or on important master dies. There are 10 containing process installed in the Mint with a maximum capacity of 250 stroke a minute. In contrast, there are 3 counter-bagging machine in the Mint with a maximum capacity of 5,000 coins in a minute. The gold refinery. This is also a silver refinery presently. The process of converting the raw gold bullion produced by the Philippines mining companies into refined gold of 99.5 to 99.9 fineness is called electrolysis. Silver may likewise be refined to 99.9 purity. The refined has the capability of producing 600.3 ounces of gold and 400,000 ounces of silver annually within the acceptable standard in the international market. Now, let's go to our questions for review and discussion. Question number 1, define money. Question number 2, what are the function of money? Explain its function. 3, what are the features or characteristics of a good money? Explain the meaning of divisibility. 4, what is the job of the central bank regarding our notes and coins in circulation? 5, what are the kinds of money? Are checks money? Why? 6, what is money's currency? 7, state briefly the nature of CV complex in Quezon City. It is really important in our economy. 8, what is the monetary standard? 9, what are the kinds of monetary standard? Explain 1. And lastly, 10, define Gresham law. Give your own example. This is the end of my third topic, money, credit, and banking. The title is Money, Function, and Kinds. Now, let's go to my fourth topic. The fourth topic. The rationale of the saving decision. That is my fourth topic. The rationale of the saving decision. All society have wealth. However, ownership and distribution of such wealth vary among societies with different economic system. For instance, under socialism, the, uh, the means of productions belong to the public and no one has the right to use the means of production like land, equipment, machine, or transportation for personal gain or other selfishness motive. The reason for removal of the means of production from private ownership is that it is the root of causes division among members of the society. For instance, of there are poor and there are rich, there are master and there are servants, there are tenants and there are landlords, and there are workers and there are capitalists. Wealth is anything which has her economic value. This means it has a price, it has price, and it's also generate prestige and power. A very good example of wealth is money. It can be exchanged with goods and services. More money means more wealth as measured by the number of goods and services acquired by the private individuals under the economic system. Capitalism under such economic system, goods and services are distributed by the market mechanism. That is, those who have more money can acquire more goods and services that are for sale. One way to always create wealth, services that are for sale. One way to create wealth is through saving. Some individuals save in order to put up a business in the near future. Others save their money in their banks for security and for interest earning. Bank saving are also used for investment by loan applicants. In short, saving are utilized to finance production, which is a very good source of wealth. This is chapter explain the rationale of saving within the context of a capitalist economy. The decision the saving is greatly influenced by individual income and other forms of wealth, security of employment, a standard of living, and social security program of the government, among other things. The nature of wealth, considering the fact that savings means by which wealth by being accumulated, it will be logical to explore the first. The meaning of the term wealth, it may be simply referred to the difference between the value of asset and thus the liabilities. Another definition of the term wealth may be as those things are useful, scarce, material, and transferable. Castillo 1969 is still another definition state that is a value of the household net equity in the things of household owned. Obano et al. 1972, wealth must possess three essential elements as may be deduced from the last definition. They are and privileged to enjoy the use and fruits of what have you of the thing all by himself or at his discretion in cooperation and communion with others as the case may be. Uh, Again, good morning. Uh, I will continue this my topic tomorrow because it's already 12 midnight. So it's time to sleep. Okay, thank you for coming to all my friends and viewers, small YouTuber. Uh, God bless you all. More blessings to come. Power. Bye bye. Bye bye.